As always, wonderful and beautiful, glorious day it is. Ladies and gentlemen, this is the day the Lord has made. Let us all rejoice and be glad in it. It is a super Saturday. Absolutely, it is. It is October 19th, 2024. All right. And it's YT on YT, yours truly on YouTube. Absolutely, it is. And this is the weekly trade watch list, as we always do on Saturday evenings for October 20th through October 26th, the upcoming week. Okay. And I'm going to keep it a buck with you. Your boy had a horrible trading week. Horrible, horrible, horrible. But the thing about it is, psychology is at its high and it's going to continue to ascend. All right. So let's go over some things. I have completely already wiped my charts clean. So we're not going to even go over the ridiculous trades that I took. Excuse me. Ridiculous trades that I took this past week. But we did start off with a banger with a 1 to 10. But nevertheless, let's just continue with what we can focus on. Absolutely, absolutely 100%. All right. So you already know we're going to start on gold. Gold is the favorite pair. All right. And then we're going to do an active pair that's already printing candlesticks, which is Bitcoin. Okay. All right. And unless we have any viewers wanting some suggestions to mark up some charts for the upcoming week ahead, then put those pairs in the comment section below. All right. Put those pairs in the comment section below. All right. So here we go. So we're going to be looking at gold. All right. Gonna be looking at gold, and we're gonna mark this thing up. All right. So here we go. Right here, and now what I'm gonna do is put liquidity symbols instead of break a structure and change the character. Okay. Excuse me. Okay, this is a break a structure, which is a BOS, a bullish break a structure above. But I'm gonna put a monthly liquidity symbol above because that's taking buy side liquidity. Now, this is the effect. This is what happens as a result. This is the outcome. Okay, so what led to this outcome? Okay, you have accumulation right here. You have the reaccumulation that does what? Break an old high and lead to a new one. Okay, cool. We got that established. All right, so let's go to the weekly. All right, so excuse me, we're not necessarily worried about what's going on down here as far as the weekly. So we're more focused on what's going on in here. All right. So let's see. We have the daily. All right. So what we have on the daily is the market forming this high, coming back down low and breaking up above that high, right? So we have the daily buy side liquidity being taken right here, right? So we're going to say a daily liquidity above. Okay. Then it goes down to the H4. All right. H4. All right. And so what leads to the break of this old daily high is the market had to reaccumulate in order to break old high and lead to the new one, right? And gold is at an all-time high. Gold is at an all-time high at 21.90. All right. So, excuse me. So now let's go down to the H4. We're on H4. See some imbalances. Okay, let's go down to H1. All right. So what I see on the H1 already, I see this was a high, this was a low. The market had to reaccumulate to break this old high. So what this 1 hour high was taken, right? 1 hour high was taken. So then the market did what? Came back down low, respected the demand zone. Then it did what? Reaccumulated again, took out this high, right? So now this high was taken. All right. All right. So let's go down to the M30. See what we're cooking with. You see how prices tapped into this low, created accumulation low, accumulation, reaccumulation, boom, broke structure above there. Cool, bet. So now I'm pretty sure on a lower time frame, like M15, this candle is unmitigated. This demand zone is unmitigated. Watch. Look at it. You see? So right here on the M15, this is unmitigated. You see the fair value gap between this wick right here, bullish candlestick, longer wick, lower wick, and then you have the upper wick of this candlestick. It's called a fair value gap. All right. And you can see how price did what? It rested right here. Right. Rested right here. Continue to go bullish. Okay. That's all fine and dandy. All right. Says accumulated, reaccumulated, broke the structure, created new highs. So then you would do this. You have to map your way to the millions. Map your way to the millions. Right? M15 demand zone. Then you do this. Excuse me. Then you do this. M15 demand zone right here. All right, because it's unmitigated. Price hasn't came back down yet to refill that imbalance. All right, so now we go down to the M5. See what's going on, when these bears are going to come in. All right, so in order for the market to go bullish, it had to accumulate, reaccumulate, break above these highs. Right, so what I can see right now, I can see a bit of a divergence attempting to brew. Like this is slanting upward on the candlesticks, and it's probably more than likely sending lower on the RSI. See what I'm saying? Look at this. Attempt, you got equal highs, or you can look at this being the divergence, right? See how the divergence is attempting to come in, right? But here's the deal. You don't assume anything. You only confirm things. And I would say close of the candlestick gives you confirmation. So what I would do is this. Okay, I see market broke above this high on the M5. So I would say, hey, market broke above this high. M5 liquidity taken above, like that. And then I will go down to the M1. All right, we're like, okay, cool. This old high was broken, which means the market had to reaccumulate to break this old high to create a new one. So more than likely, we're looking for bears to come in. Okay, we're looking for bears to come in. Now, is this particular sale that wants to come in going to sell all the way down here? I don't know. Excuse me, I don't know. I have no idea at all. All right. Yeah. Gold did go crazy. Fan of the art. What's up with it? Are you in my Telegram chat channel? Are you a part of the family? Are you in the Telegram chat channel? Person who's under the username fan of the art. What's up with it, bro? My bro RTC on here. What's up with it? What's up? So fan of the art. When it typed gold went crazy. It absolutely did. It hit an all-time high. Are you a part of the Telegram chat channel? Are you a part of the Telegram chat channel? Yes or no? Oh, you're already in the group? Cool. So are you already part of the Signals chat as well? So you're a part of the community and the Signals chat, correct? You're a part of the community and the Signals chat? Because I'm getting ready to put out, as a matter of fact, after this live, I'm getting ready to put out the schedule for next week. So everybody could stay ahead, and appreciate it, bro. All right, cool. Bet. That's what's up. You good. I was just making sure that you weren't just a part of this. I was just making sure you just wasn't subscribed to the YouTube and you didn't have access to the community as well as the Signals chat. Because then everybody else has more access than you. All right. So, yeah. So here's the deal. We just marked up gold. Like I said. Oh, okay. Bet. Okay, it's real. What's up with it, bro? Appreciate you for letting me know. I see the notification popped up on my desktop. All right, so just marked up gold. Um, like I said, just marked up gold, and the bears are going to have to come in soon. Don't know when, don't know how. Got to come in soon because this high was broken. This 5 minute high was broken. Right, so they're going to have to come in sometime soon. And let me tell you, and be honest with you, this is one of my favorite moves in the market on any pair. Um, when the market does this right here, when the market right here, let's see, when the market does this is one of my favorite moves. When you have a low, when you have this first impulsive bullish move, and then that impulsive bullish move hits this redistribution in between here. This redistribution is supposed to be a lower high. It's supposed to do what? Distribute, redistribute, break the old low, create a new low, but it didn't. You gotta stop by the demand zone of this first impulsive bullish move, which means this is nullifying and solidifying that, hey, we want to be a higher low in the market. And so when the market accumulates and reaccumulates and it breaks above this high, you could have taken you a buy market execution and your stop loss would be right below the what? The reaccumulation. It'll be right below the reaccumulation. So it'll look something like this. Like the move would have looked something like this. You'd have had a buy market execution. You didn't have to wait for the close of the candlestick on this one. Because when the market says I'm breaking this high, then guess what? When it comes to Elliott waves, this is what this is called. Wave 1, wave 2, and then wave 3 is that impulsive move. Okay. Wave 3, when it comes to Elliott waves, wave 3 is the largest impulsive wave, but is never the shortest. Okay. So if I draw Elliott waves right here, 1, 2, 3, 4, 5. Okay, the rules of Elliott waves. When it comes to waves 1, wave 3, wave 5, these are impulsive waves, and waves 4 and waves 2 are retracements, pullbacks, or corrections. Okay. But when it comes to the impulsive waves, being waves 1, 3, and 5, wave 3 is normally the largest wave. So you can see how right here, when it comes to the rules, this is the beginning of wave 1. This is the ending of wave 1. This is the beginning of wave 2. This is the ending of wave 2. So you can see how right here, just from wave 1 to wave 2, this is exactly what that was. You had this being a wave 1 right here, and this right here being a wave 2 because it didn't break below the beginning point. It didn't break below the starting point of wave 1. So then you got wave 1, wave 2, the higher low, then bam, here go the impulsive move wave 3 that does what? Break the structure and create the high. Because now here's the deal. A divergence is always created between waves 3, 4, and 5. Doesn't matter if it's a bullish or bearish divergence. A divergence is always created between waves 3, 4, and 5. Okay, so had we been watching this and catching this live, this is how the trade would have looked. Take a buy market execution as soon as price broke above that high. The stop loss would have been below the reaccumulation or the last low. So maybe right here. Okay. So according to my bro Ron, this is a 21.3 pip stop loss. Okay. And he know me that, okay, TP1 would have been at this high. Okay. So this would have been a take partial area. Okay. And stop loss would have went to break even. And then TP2 would have been at 10% of that. So TP2 would have been way up here at 10%. Right. So we would have been holding this trade like this. We'd have still been holding this trade. We'd have been at risk. We'd have took partials right here, 50%. Stop loss would have been at risk free at break even. And then I would have let the rest overall ride to 10%. Now, some people would have been like, well, hey, bro, like you deep in profits. Why wouldn't you just close the whole trade? Well, here's my thing. It's like you putting in the bullets. It's like when you're working against yourself, you might as well buy the bullets to the 9mm, place the bullets in the 9mm, and then give the market the gun in order to shoot back at you. That's how I look at it. That's exactly how I look at it. It's like, okay, I understand you have a dollar amount goal, or I understand you may have a dollar amount and a percentage goal, percentage increase. Okay, cool. Here's the deal. Even if after TP1 has been hit and you close 50% partials of your trade, yeah, you've reached your goal. But guess what? What if the trade continues to go your direction? Just think about if you took yourself completely out of the market, right? Versus the market taking you out of the market. How many times does that play on your psychology? Like you'd be, oh, bro, man, I should have stayed in the trade, man. It ran 10%. Yeah, but the thing about it is that's why you have a take partial system, so you can pay yourself at least half from the trade versus walking away from the trade with pennies. Now I had to learn it the hard way because I used to trade with my ego. I used to say, man, you know what? Me doing a take partial system, I'm actually lowering my lot size in order to go for more. Man, I'm not cool with that. I'm not cool with that. So what I'm gonna do is if it hit TP1, I'm gonna just put my stop loss at break even and it'll be a risk-free trade. But then a lot of times you're gonna find the market doing a U-turn and you're gonna walk away with pennies. Something that you were patiently waiting for. You finally get into the market, you finally got a setup, a dope setup, and then it does a U-turn and comes back and hits your break even because you were shooting for TP2 and beyond. You know, so that's why you want to take partials every time it hits a TP. Every time it's a TP, you take partials. Now, I don't use a trailing stop loss for the simple fact of the retracement and the pullback. I have no emotions in the trade if my stop loss is at break even. So why do I need to shadow my trade? Why do I need to shadow my trade? Because then here's the deal. If I'm shadowing my trade, that trade does a retracement or a pullback and a correction and it goes off and hits TP2 and possibly TP3. Well, if you just would have kept your stop loss at break even, then the trade would have ran off. So I don't shadow my trade. I don't do a trailing stop loss. Once I take partials at TP1, close 50% partial, stop loss goes to break even, is now a risk-free trade, and I let the rest ride. Now here's the deal. Once that happens, I can do one or two things. If I'm currently in a buy, right? I can then look for a hedge trade in the opposite direction. A hedge trade is just a trade opposite of what you're currently in. So if I'm currently in a buy in this particular example, then I would then turn around and look for a confirmation based sale if I choose to, because I can no longer take a lesson on my current buy position. Does that make sense? So now at that point, you are utilizing the market's profits against itself. So here's the deal. Say for example, if I were to enter a gold trade with a 0.04 lot size, and at TP1, obviously half of 0.04, I would take what? 0.02 partials and leave the other 0.02 what? In the market to run all the way to TP2, my 10%. My 10% trade, overall TP. Now here's the deal. Stop loss goes to break even, 50% partials taken at TP1. I'm down from a 0.04 to 0.02. Now, here's the deal. If I'm going to take a hedge position, the hedge position has to be the current lot size that I currently have. It can't be a 0.04 because what you're going to do is this. You're going to risk the profits that you just gained at TP1 and you're going to put it back into the market. Why would you do that? So if you're going to take a hedge position, okay, if you're going to take a hedge position, it has to be equivalent or less than the lot size you currently have on your current trade that's at break even. Does that make sense? What's up, Sniper Shot on IG? What's up with it? Does that make sense? Anybody not understand what I just went over? Anybody not understand what I just went over? Let me know. Let me know what's up. Let me know what's up. Okay. So now that I've drawn up gold, we're about to transition to Bitcoin. Any other pairs that anybody else trades that they want to see marked up? Type it in the chat. Post it in the comments on the YouTube on the live. All right, so we're about to transition to Bitcoin. So, like I said, I would expect for gold to come back down here and refill this imbalance, since we know that's an imbalance on the M15, as we can see, right? At some point in time, gold is going to eventually come back down and refill that. So what we see right here on the M15 is we see price right here. We see how price tapped in to this demand zone, right? What's this? M15. We on the 15-minute. So see how price tapped in right here. Price tapped in right here and then did what? It broke structure up there, right? Remember. So the market is always going to create M's and W's, okay? And it's going to create those M's and W's with the pivots of the Wyckoff market price cycles, and it's going to print them in order. All right, it's going to print them absolutely in order. All right. Oh, no, not that. I want a 15-minute liquidity above. There we go. All right, let's see what's up. This low was broken right here, which means the buyers got to come in. This low and this low was taken as liquidity. Boom, buyers come in. This right here is now a breaking structure right here. So 15-minute liquidity above. Boom. Okay, price goes up. Price taps into something right here. So bam, 15-minute liquidity above. All right. Then the market is obviously, we got this as an imbalance right here. Market's going to come back and snatch that at some point in time. But right now, the most recent one is this one. This low broke this structure, created this high. So probably looking for a sell, come down here and TP1 out right here. All right. So let me see what's up. Okay, we got GU and GJ. Okay. GU and GJ after Bitcoin. That's what's up. I got you. All right. So here's Bitcoin. All right. If you don't know, Bitcoin is a crypto. Cryptos don't ever stop running. Okay. Cryptos never stop printing. It keeps going and going and going because it is a decentralized market. There's nothing moving crypto. Okay. So let's start with the monthly. Okay. Let's start off on the monthly. Now, remember, the market price cycles are accumulation, reaccumulation, distribution, redistribution. Okay. Accumulation, reaccumulation, distribution, redistribution. So what do I mean by that? Let me just draw a quick illustration before we get into the actual candlesticks. All right. So here's the deal. We got this as an uptrend. We got what? Let's see. Drawing tools. Okay. We have a. Okay, look. We got a low. We got a low. Got accumulation, reaccumulation in between here, bullish triangle, distribution, redistribution, accumulation, reaccumulation, break of structure, distribution, redistribution. All right. Make sense so far? Make sense so far? How you understanding how the market price cycles print? Accumulation. Right here is going to be the what? Reaccumulation. You got the distribution. You got the what? Redistribution. Accumulation, reaccumulation. And we got a what? The break of structure. You got the distribution, redistribution, right? And the market does what? Accumulate again. All right. Y'all got that so far? Cool. Bet. All right. Now here's the deal. Erase this. Now let's go to Bitcoin. All right. This right here. Break of structure, right? So eventually this is gonna fall. All right. Because the market did what? Accumulated, reaccumulated, broke this high, created a new one. So it's eventually going to fall. It's just a cooking distribution. Do you have to wait for it? No, absolutely not. All right. So right here, what do we see? On the weekly, what do we have? We have the market creating a let's say this is a high, it's a low. What do we do? Accumulate, reaccumulate, came back to the supply zone, distributed, redistributed, broke this low, created a new low. Okay, accumulated, reaccumulate. So now look, here's the deal. We got this low being broken. Boom. What's that? New low being broken, right? So the buyers got to come in, right? Okay, cool. Accumulation, reaccumulation. Smack to the supply zone. Distribution, redistribution, breaks the old low, creates a new low. Okay, liquidity taken again. So what? The buyers got to come in. Okay. Accumulation, reaccumulation. Stopped right here. Distribution, redistribution. Oh, this distribution, redistribution did not do what? Create a new low. So now what happened? Let's go to the daily. All right. Let's get this on the daily. So now we see that what? This accumulation, reaccumulation did what? Tapped into a redistribution. This redistribution created this what? This lower high. This lower high did not do what? Distribute, redistribute, break the old low, create the new low. It stopped right here. So guess what? Oh, now we like this. We're low, high, higher low, break above here, higher high. Makes sense? So now that this high has been broken, we know that the what? The sellers got to come in. Okay, the sellers got to come in. All right, cool, bet. So the sellers come in, they rest right here on this zone and decide to do what? Go back bullish. Okay, so there's a daily demand. All right, and where was the fuel for this move to go bullish? Right here. It took this old low out and created a new low. And this is the fuel right here. This was the liquidity and the fuel that led to the what? The buy move, the accumulation, reaccumulation, break above this high, create a new one, right? So, bam. Here we go. Now we know that the bears need to come in long term. Long term, we know the bears need to come in because this high has been broken. Make sense? So now, how we mark this up? Okay, low led to what? This breaking structure high, came back down, led to this low, and led to what? Accumulation, reaccumulation, breaking structure high. So we have what? What do we see on the daily? We have two unmitigated, imbalanced demand zones that broke an old structure and led to a high. So eventually the bears got to come back in soon. Okay. The bears are going to have to come back in soon and answer. All right. So now let's see what we have. Let's see what we have. Right. Y'all still tuned in. That's what's up. That's what's up. Appreciate the love. So let's see what's up. Market broke above this high. H4 came high, came low, broke above this high. So now we got a sweep of this high. Right. 4 hour liquidity above, sweep of that high. There's an area where the bulls can push back at. So let's see. All right. So look how look how in between here this liquidity was taken. Okay. The market accumulated, reaccumulated, swept this high, right? So the market came and swept this high. We know the bulls have got to come in now. Now that this high was swept right here, the bulls have to come in. I mean, not the bulls, the bears. Excuse me, the bears have to come in now. So now that the market did this, what? It swept. This low was swept right here, right? Because what causes that low to be swept? What caused this old low to be swept? A distribution, redistribution, broke the old low, led to a new low. Then the bulls got to come in now. So the bulls come in, accumulate, reaccumulate, break this old high, create a new one. Now the bears have to come in, right? So now you see this supply zone right here that's unmitigated. You see the supply zone is unmitigated, right? Cool. You can mark that out. Be like, okay, cool. As a supply zone is unmitigated. Okay, cool. Bet 1 hour supply. It really would save you some time if you create yourself some templates. So let's go down to the M30, M15. Let's see what's cooking. All right. So I do see this imbalance on the M15 right here, right? If the market mitigated, it's probably attempting to shoot back up. So look, what do you see right here? You see that the market tapped into a supply zone, created a lower high. This lower high has not done what? It hasn't done its job, broke this low and led to a new low. It hasn't done it yet. All right. That has not transpired. So you can see how the accumulation came in off of this level in order to do what? Push back up. I don't know what its purpose is. It may just go back to the supply zone, but that's what it did. The buyers weren't ready for this low to be broken. Accumulation came and popped in. So I don't know what's going to happen long term though. But you can see how this high has been broken, H1 high, and you can see the distribution. You can see the bearish divergence and the market changing character without even looking at the RSI. You can see how this is slanting upward on the candlesticks, and then on the RSI is going to be slanting downward. Look at it. You see what I'm saying? When you're able to see it, you're able to develop that trader's eye. You're able to develop that trader's eye. So now that the market diverged and changed character, I want to see if the market wants to come back and retest the supplies on the cause of change of character, or it wants to do what? Create a redistribution, go down, and then look to mitigate a demand zone. That's the whole goal of a divergence and change of character. You want to see one or two things. All right. So with Bitcoin, let me see. Coming off of this level. All right. Oh, this could be liquidity right here. Don't know what its purpose is yet, but it could be liquidity. All right. Let's see. That's pretty much it for Bitcoin. It's just a wait. It's just a waiting game to see what's gonna happen. Cause you see how price attempted to diverge and it changed character right here. That's why I tell you all the time: a change of character does not determine a change of trend, but a break of structure shows continuation of a trend. You can see how this low and this low is slanting lower. And you see how on the RSI slanting upward, and this midpoint right here is a change of character area. But just because you had a bullish change of character, that means you got the sellers at some point in time going to come in, and he came in right off of here as soon as they took this high. So the next balance zone on the M15 is sitting right here. As far as the opportunity for the bulls to push back, but you also have a divergence and change of character up here. The market never retraced it. The supplies on the cause of change of character, so it probably created that redistribution, and it's probably wanting to do what? Go back bullish right now, because I'm seeing price diverge, change character, come back down into the a reaccumulation, and probably want to go back bullish. That's what I'm seeing, but I absolutely could be 100% wrong as well. I see this imbalance on right here on Bitcoin. It's where the last imbalance came from, broke this structure, created this high. So don't know. Have some options. But you have a trading plan and trade based off your trading plan. 1 hour demand. Excuse me. So let me see. I think it's going to turn out to be a redistribution and then fall down here and then buy from here. That's just my anticipation. That is just my anticipation. All right. So then we're going to look at GJ. Let's go look at GJ. I got a request for GJ and I got a request for GU. Right? GU and GJ. Okay, let's look at GU first then, since that's what was said. GU. All right, let's go to the monthly. Let's erase everything. All right, and draws up from scratch. All right, cool, bet. So what we see on I see an entire accumulation. Like this right here slanting lower. And then on the RSI slanting upward. That's what I see. This being an entire accumulation. Because I see my redistribution back here. So watch. It might be an equal. Yes, equals. So same thing. So it's a hidden divergence. See how this is equal across, equal lows, and it's not slanting lower like that. So yeah, overall, I think it's going to be a long-term accumulation. All right, long-term accumulation for GJ. Do we have to take it based? Well, we need to understand what the higher time frame is attempting to print before we go to the lower time frame, attempting to trade the lower time frame. All right. So we're looking for long-term accumulation. All right. So every time frame acts as its own market. Okay. So be careful where you are. Be cognizant of where you are. Okay. So what I see now on the weekly, let's go to the weekly, how price has tapped into this level right here, right? Price has tapped into this level, created a higher low on it. So this will be a weekly demand since we're on a weekly drawing it. All right. And so this will be what? A break of structure, right? There'll be a regular structure. So it'll be a weekly liquidity above since the high was broken. All right. So now you can see all in between here how you want to put on a daily, you can, how price came and mitigated this area, right? Created that low on the daily and then internally caused the break of structure right here. This whole thing right here is a divergence. Okay, and this is the change of character. So what? You got your distribution, redistribution, bam, accumulation, reaccumulation, right? Here's the distribution, redistribution, here's the accumulation, breaks that structure, right? Creates that high, distribution, redistribution, taps into here, accumulation, reaccumulation, breaks that high, boom. All right. So you see how this is happening. Now you can see how possibly a divergence is popping up through here, and then this will be the change of character. Okay, without even looking at the RSI, I can see that. Okay, so number one, this is a divergence right here. Okay, on a daily. I'm gonna point out all the divergences before we even look at on RSI. I'm gonna show you how you can develop that traders out like I have. Okay, this right here is a divergence. This right here is a divergence. This right here itself is a divergence. This right here is a divergence as well. But on the RSI, on this particular RSI, this would be the entire divergence. Okay, this right here would be the entire divergence. Okay, and this would be the change of character area. Okay, so watch we go ahead and confirm. Okay, Watch, we go ahead and confirm. Boom. Okay. You got what? Equal highs right here. Look. Equal highs right here. Boom. Makes that a divergence. Makes this right here the change of character because it was the last what? Accumulation, reaccumulation that broke this high and created a new one. Okay. That was the last accumulation low in the market. So it makes it the change of character area. Okay. Right here. Same thing. Look. Price is landing upward. Price landing downward on the RSI. Right? Same thing with this one. Okay, you can't really tell, but it's it because it broke the structure, created its high, right? Boom. Tapped in again. Look at this one. Slanting upward, slanting lower. Right? Midpoint, that's a change of character area. I told you, man, when you develop this trade design, you develop it. All right. So this is GU. This is GU. So boom. All right. So this is the daily, right? So we can mark this as a daily demand, right? It already been hit. Cool. Let's see. You see a broke structure above there. We see we have a change of character right here, which means this low has been taken. This low liquidity has been taken. All right. So what we see is this on the daily. We see this on the daily. Let's say this low led to this high, led to this low. And we go say the market led to this high, led to this low. And we go say led to this high, led to this low, led to the market creating this high. Right now, I could mark out each of those highs, but we just focus on the significant ones, okay? And let's see, we go down to the H4. We can see the bulls possibly coming in after the change of character, right? Because we have the what? Redistribution. We have the redistribution, right? So you could possibly see the change of character attempting to come in. I mean, after the change of character, the low, because you got to remember, a daily low has been taken. A daily low has been taken. So that means the market redistributed right here, broke the low, created a new low. Okay. So you have to take that into consideration. Now, this is an engulfing candlestick. This is a supply zone. Is the supply zone going to create a lower high and do what? Distribute, redistribute, break this low, create a new low? We don't know until it prints. Okay. We do not know until it prints. Now let's look at some evidence probably right here and see more than likely what is the market going to do. What I do see right now is the market accumulated right here, bullish divergence, change of character. Here's your reaccumulation right here into a supply zone. So more than likely it might sell off and break that low. Might sell off and break that low. Okay. Market may sell off and break that low based off of what I'm looking at. All right, you can see the divergence in between here. You can see the change of character, right? So let's see what's up. See how it's slanting lower and this slanting upward. This is the last lower high that broke the structure, led to these lows, and then boom, this is the change of character, right? So the market changes character. Okay, market changes character, 1 hour liquidity above. All right, bulls came in back off of here, pushed it back up. See what's happening on the lower time frame. Accumulation, reaccumulation. All right. So since market created a high, low, came tapped into supply zone, lower high, this broke structure low, created a low, come back up, and then you put a zone right here, be like, hey, this is the M5 or this is the M5 supply zone. All right, because you got your accumulation right here that's unmitigated, imbalanced. You got your reaccumulation, market popping up again. So you probably could get sales from here, confirmation based sales from that GU high that the market tapped into. That's what I'm seeing. I'm seeing that because you have an imbalanced accumulation right here, then the market creates a reaccumulation going back into a supply zone. All right. And waiting confirmation based sales. Oops. This is what I see on GU. This is what I see on GU. All right. Now we got GJ. GJ, and I'm going to log off and nobody else comes up with any other pairs. All right. So here's the deal. Boom. Let's erase all of this. Bam. Well, we see how the market has created this low, came up, changed character, created this high. You know, that's a distribution right here, right? Distribution, redistribution. The market did not break this low and create a new low. Popped up to this redistribution, create a lower high. This lower high led to what? A new low right here. Swept this low, and then accumulated, reaccumulated, changed character right here. Ultimately changed character right here, and then boom, you got your reaccumulation, and it led to the break of the structure high. Everybody see that, right? All right, cool, bet. So here's the deal. This is what I see. The market has taken this high, right? Boom. Bears need to come in long term. All right, cool. So let's tap into this right here. Weekly. See how the market is tapped in right here to this low. And it tapped in right here, created a high, low, high, higher low, breaker structure, high, high. So got this on the weekly demand, right? Come to the daily, call that a breaker structure. You can see the divergence, right? You see how price diverged, change character right here, right? See this? Slanting upward and then slanting lower on the RSI. Oh, it ain't slanting lower, but it be slanting lower on the other one. See? Slanting upward, slanting lower. See what I'm saying? Divergence. Okay, cool, bet. It's a divergence. It's just not appearing on the RSI on the daily. All right. So cool. So what is this? What you'll do is this. Okay, this is a low. All right. This is a high. This is a low. Market did what? Broke structure, right? Took this high. Daily liquidity above. Oops. There we go. All right. Now you got to realize that this is a supply zone. Redistribution. Supply zone where the sellers can come in at, right? So this high has been taken. So then you would look for sales from here. That would be your anticipation. Okay. So let's go to the H4. H4, what do we have? You got market creating a low, high, higher low, bam, break a structure. So took this like this. 4-hour liquidity above. Market came back here, diverged, changed character, broke this high. Boom. 4-hour liquidity above. All right, cool. Market accumulated, reaccumulated again. Did not break this high. Came back down. That did break the high. Right here. Okay. Boom, come back down. Bulls came back in. Low, high, higher low. Boom, broke in between here. So Took this high out. 1 hour liquidity above. Okay, cool. Price came in, pushed up above here. Bears got to come in. Came down here, pushed up. This higher low did not have enough to break above this high. Came back, created a supply zone. The market sold off of here. So 1 hour supply zone. Okay. So now what we have? We have the market creating a high. We got a low. We got a lower high. We got a lower low. Okay, let's go to M30, M15, see what we're cooking with. All right. So this has been a dope buy move on the M5. So look. Yeah, the market creating a low. Market come back high. Higher low, right? Breaking structure right here, creating a high. That'd have been dope. That'd been a dope catch to catch the buy entry off that deal. So now I can say, hey, M5 demand zone right here. Because now I have what? This high, this low, and the market breaking above here and creating what? This high right here. And so this is the most recent imbalanced accumulated zone. So don't get caught up in between attempting to chase this. Okay? Stick to your buy wanting to be down here. Excuse me. Here we go. 5 minute demand. So this is my opinion. And so look at it this way. If you want to look at it from M1, got this low, got this high, higher low. Market did what? Took this high. Took this liquidity. Bam. Where we at now? In a possible supply zone. Or you got, look at this. You got the market created this high, came back this low right here. And then the market did what? 1 minute demand. It took this high. Same stuff every single day, all day, every day. Just got to take your time. Just got to take your time. Now, what this appears to me is like a distribution, but I could be wrong. It's just printing like one. It appears to be. So, any other pairs done marking up gold, Bitcoin, GU, and GJ? Any other pairs anybody else wants to have marked up? Anybody have a fifth pair? We do 5. Gotta go for 5th. We did gold and Bitcoin are definitely already 2. Taking is already going to be marked up. But then somebody spat out GU and GJ. That's 4. Who's got a 5th? Who has a 5th pair? Got to have a starting 5. Must have a starting 5. Nobody else? Anybody watching me on live right now, not in the community and the signals chat? By the way, want to tell you that my goal is to prepare you for taking these prop firm challenges. Okay, that's my goal for you. Once you have some sense of comfortable, okay, NZD/USD, I will do that. That's the starting 5. Okay, so my goal is for you to be comfortable, be able to take these prop firm challenges, preferably sway funded, because Sway Funded they have three different type of challenges. They have a rapid assessment, and I know they have the consistency rule, and then they have the regular phase one and phase two. So they have three different types of challenges. Now, you can take a challenge as small as a $1,000 funded challenge. Right now, if you apply the discount code Fall15 all caps, Fall15 all caps, you will get a 15% discount off of your funded challenge. Fall15 all caps, you will have a 15% discount at checkout. All right. So, great thing about trading with Sway charts and trading with Sway funded, um, you have a built-in trading journal. Okay, if you've been racking your brain about, oh, I know I want to take this trading thing seriously, and I know I need to become a professional trader. I need to do what professional traders do. You have a digitized trading journal already built in within side of your uh, trading platform. I'm going to slide it over because I'm looking at my 19-inch smart TV, and I'm going to simply slide over the Sway chart so we can go over it. All right. So here's the deal. We have the Sway chart, right? As a matter of fact, before I even go over this, let me make sure that I'm sharing. Oh yeah, I'm sharing it. I'm sharing it. All right. So right here you have the trading dashboard, right? Well, no. So the trading dashboard right here, it'll show you what it'll do. It'll show you your total net profit and loss, your average daily net profit and loss. Okay, your risk to reward ratio, the instruments you have traded, the winning percentage, the return, the max drawdown, average winning trade profit and loss, the net profit and loss, and the average losing trade holding time and losing trade profit and loss per day. And it will show you all of the instruments you have traded on that day. So it's a Monday, Tuesday, Wednesday, Thursday, Friday. Okay, and Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, because you can't trade on Saturday because the forex market is closed. But it'll still pop up here if you're trading Bitcoin, Ripple, like because Ripple is rippling right now, because you can see how Ripple is you can see how Bitcoin is open. Ripple is also a crypto. Okay, XRP USD. That's called Ripple. Okay, XPX 500. It's an indice. So XPX, the indices have times like the stock market. Okay, it opens up at 8 a.m. Central, 9 a.m. Eastern, I believe, and then it closes at 4 p.m. Central, 5 p.m. Eastern, just like the stock market. Because if you didn't know, also I'm a licensed life insurance agent in a state of Texas and state of Louisiana. And so if you have a 401k, 435b, uh any one of those city government pensions that you're investing in, and they have the 2-to-1 company match. Normally the generic one is 401k. You're contributing, and the goal is to contribute to it and max it out every single year, right? But here's the deal: you don't understand why your 401k is losing money, and they don't tell you this. So the reason why your 401k is losing money is because it's exposed to market losses and is based off the performance of the index, which is called the SPX 500. Okay. Your 401k is based off the performance of the SPX 500. Okay. So here's the deal. What are you supposed to do to prevent the 401k from being exposed to market losses? What you're supposed to do is roll it over into an annuity. Now, an annuity is a retirement tool, right? It's a retirement tool that you put your money into so that you can have guaranteed income for life. Okay. Now, there are three different types of annuities. You have a fixed annuity, you have a variable annuity, and you have a indexed annuity. Okay. And it is not up here with me. As a matter of fact, it's on my email. Okay. So what I'm going to do is I'm going to go my email. What's up, Mohammed Khalifa? What's up? What's up? What's up with it, man? Appreciate you for tapping in. Okay, but before I do all that, let's go to NU. Somebody said NU. All right. So let's go to NZDUSD and let's mark it up from scratch. All right. I only believe I have it marked up anyway. What version is this? Hold on. Oh, this is the Owanda version. Okay. Bam. Here we go. So NZDUSD. Here we go. All right. So we see that this is the most recent low in the market, right? We see that this is the most recent low, and then this is the most recent high. Okay. This high is supposed to do what? Lead to the break of this low and to do what? Create a new low. It's just if this is going to be a lower high, it's supposed to do what? Break this low and create a new low. Now, the bulls could probably stop that, but we got to see what's going on. We have to absolutely see what is happening in the market. All right. What I see the bulls attempting to come back in because what I see is the market, okay, accumulated, reaccumulated. It came to the supply zone, distributed, redistributed. The market created this higher low, pushed back up. Bears pushed back down, and the market has not recovered and broken this low. So we'll see what's up. All right. So as of right now, this is the low for right now, unless the market wants to create a new low. All right. Let's go to the weekly, see what's up. All right. So we see price diverging, changing character. Okay. We see the bears came in, push it down, did not break this low yet. It did not it did probably break above this high with a wick. But let's see what's going on right here. See, go with the daily. You know what this is. Divergence, a change of character, right? So what do we see right here? See price diverging right here, changing character. So, okay, this could be an area of interest where the bulls come back in. So we have to zone that out because the market last did what? Created this imbalance right here and broke this structure right here. So this is a possible area of interest where the buyers may come in at. You just got to get wait to the market, hit that area and get confirmation. All right. So got price diverging, got the change of character. The market did what? Took this low out because this was an area of interest because the market accumulated, reaccumulated, broke this high, created this new one, and it did not respect this low. So it's called now a change of character. So we're going to put the daily liquidity below because that low has been taken and wiped out, right? You see how market's sliding upward, equal highs on RSI, hidden divergence. So anything else in between that, if you probably might, depending on the confirmation, you might want to take sales from here to down there. That is completely up to you and your trading plan. 100% up to you and your trading plan. So let's see what's up. Okay, this is all I see on NU. That's all I see on NZDUSD. I think long term this thing gonna drop to right here. I got it. Yeah. Ooh-wee. That 4-hour time frame. Actually, yeah, that's just my prediction is as it comes down here and buyers attempt to show up from here because you took this low. That's what I see on NZDUSD. All right. That's what I see on NU. What'd you say, Muhammad? Liquidity concept? Liquidity concept on what? Liquidity concept on what pair? Or are you referring to what I was doing, what I was drawing? Because I trade based off of liquidity and market price cycles. Liquidity and market price cycles. So here's the deal. I want to pull up something on my email. Hopefully I still have it saved. Yeah, hopefully I still have it saved. Oh, snap. Let me see. Okay, I'll probably show you all next week because yeah, I'll show you all next week. I don't have the digital version of the indexes, but yeah. So any questions, problems, or concerns before we before there's a warrant out for our arrest next week because we're about to murder the market. Any questions, problems, or concerns? So with sway charts, okay? Going back over sway charts. So right here, you have the my account. When you put now, here's the deal. When you put in pending orders, right? I mean, I don't put in pending orders. I do like to do market executions, but that's just trader preferenced. When you're putting pending orders, you have a pending order set. If you can't find it, this is how you find it. You go to my account, you go to orders history, and then when you go to order history, your pending order will be sitting right here. Your buy limit, your sell stop, buy stop will be sitting right here. Now you could choose to right click and deactivate it or right click and modify before it gets activated, anything dealing with that order. Okay. So that's how you get to um, your pending order after you place it in. Now you can also create your own watch list, right? You can come right here and you can create your own watch list. You start typing symbols. And mine, I like to have mine with some unison and some unification. So I have mine in alphabetical order. Okay. I know all of my Forex majors and minors are in alphabetical order. Come down here. Here's the metal gold. Here's indice, US 30, indice, uh, NAS 100, indice, SPX 500. Then I got my cryptos, Bitcoin and Ripple. All right. Let's see what else. You got one click trading. You got the trading journal. The trading journal right here. So here's the deal. What happens when if you go into a trade and you take partials? Okay. So open this particular trade on gold, right? At a 0.08 lot size. Took partials at what? 26.57.47, right? And then the other remaining closed at what? 32.48. That's how it goes. Now you can draw up on sway charts as well, right? You can pull up the chart right here. You can pull up the actual chart and you can start drawing on it as well. Has the drawing tools. You have a trend line, draw a trend line. Okay. This is Apple. Okay. And you actually take the trades on here. Okay. Actually take the trades on here. I like using trading view so I don't have to flip flop back and forth to be able to see my chart and everything like that. Nothing against using sway charts. All right. Also, if you want to swap from your live to your demo, all you have to do is come over here where it says live account, swap down, and then boom, you'll transition to your demo. All right. Also, if you're practicing a strategy or whatever the case may be, what you can do is this: you don't have to create multiple demo accounts. Okay, you don't have to do it unless you're using one account as, oh, I'm using this as my scalping account, and I'm using this other account as my swing account. Okay, then I get it. But if you mess up, whatever the case may be, or you didn't take a trade based off of your trading rules, then what you could do is just go back into your sway charts, your sway market right here, your sway market account. And what you can do, you just add the money back. So if you took a lesson, let's say the $10,000 demo account went down to 9,900. Okay, cool. You need to add $100 back. Boom. Deposit another $100, not real money, $100, demo money, and it'll go back up to your original starting point, which is 10,000. You can actually add as much money as you want on your demo. So I can get an email. All right. Hello, Jasmine. Oh, okay. So what you can do is right here where it says demo, right? You can come to deposit and then you can just type that money back. If you took a $100 lesson, which is down from 10,000 9,900, boom, you can type $100 and then you can press enter and then it'll add to it. Okay. So that's pretty much going to be it for today's session. I really appreciate each and every one of you for taking time out of your busy schedule in order to listen to what I have to say. It is always greatly appreciated. I will never ever take it for granted. Have a safe, blessed, and productive rest of your super Saturday and blessed weekend. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose. So what purpose are you willing to fulfill? And always remember, don't be one of many, be the one. Don't be one of many, be the one. So if you're in my Telegram group, what we're going to start doing, I believe even though it's the middle of the month, I want to start possibly doing tomorrow. I'm going to start incorporating some personal self development. All right, because personal self development goes into this as part of trading. So we're going to be reading some books that have something to do with trading. I'm going to be reading some books that have nothing to do with trading. Okay, you see these books behind me. Not all of the books that I have in my library are on that shelf back there. I got books sitting right here. I got books downstairs. I got books all over the place. Okay. So what I want to do is start doing a book of the month. I want to start doing a book of the month and to really challenge people with their psychology and their cognitive thinking. Also, let's see. Um, let's see. It was something else I was thinking about. But yeah, definitely. I was thinking about doing a book of the month and schedules. So I have recently started doing a personal schedule. Now this schedule is not its schedule is for you, not for your significant other, not for your fiance, not for your spouse, not for your cousin Day Day, not for cousin Doodoo, not for this is a daily personal schedule. Okay. So what I challenge everybody to do for starting tonight and for this upcoming week is to have your next 24 hours laid out. Okay? Because what I tailor it to do is I tailor it to if you don't have a schedule, it's like a stop loss, not having a stop loss in the trade. I like to also tailor it to firefighting. It's like stepping off the fire truck and just grabbing the hose and just putting out the fire with no plan. It's called freelancing. You're an adult. You've been an adult since you was 18 years old legally. Um, you have as you get older, you have so many important things and tasks to do every single day. Okay, I'm talking about having a beginning and ending time on everything: showering, brushing teeth, doing errands, doing homework, uh, reading a book, studying, whatever it is, have a beginning and ending time. Now, the thing is to not complete it unless it depends on the assigning of the tasks. Okay, the whole point of the schedule is to begin on time and to end on time. That's the discipline you're attempting to create. That's the discipline. You're becoming a disciple of discipline, and you're becoming super, super punctual. So what you need these small victories and pats on the back and these small rewards in order for you what to tailor it into your trading. Okay, because if you're not patting yourself on the back, then who is? If you're not your biggest fan, then who is? You know, so schedule your workouts, the exercises you're going to be doing, how many reps, how many sets, what you're going to be eating, how many calories you consume. Everything is all about numbers. Everything is all about numbers. So that's why I always say KYN, know your numbers. Know your numbers. Be serious about what you're doing and take it seriously. Once you take it seriously, it becomes a daily habit. Then it becomes a weekly habit. Then it becomes a monthly habit. Then it becomes a yearly, annual habit. Right. So continue to work on it. And if you like lose sight of the habit, the great habit you attempted to create, then guess what? I recommend looking at on YouTube, listening to Earl Nightingale, The Strangest Secret by Earl Nightingale. Okay. And just listening to that over and over again. Very, very powerful. Very, very scripture related. And it'll change your life once you understand the concepts that come out of that 30 to 35-minute video. Right. So appreciate you all. Love you all to life. You can tap in with me. If you have individuals that want to learn the skill set of trading, I don't care if it's beginner, intermediate, advanced, but as long as they not on no bull jive or none of that stuff, because we had my Facebook is attached to my Threads account. I put my Zoom link out there and they went crazy. Trollers and spammers came on there on the last session and start drawing inappropriate things and all of that on my Zoom. I had to shut that particular Zoom down. I had to reboot it and come back on and enable the waiting room in order for me to actually have to click to allow people to come in. So if you know somebody that's 18 years or older and they seriously want to take the skill set of trading seriously, this is a free Telegram community and Signals chat for you to be able to put them in. All right. I will introduce them, give them a shout out, and tell everybody, hey, here's Jane Doe embarking on the trading journey with us to becoming a consistent, profitable trader. Everybody welcome in Jane Doe. Or hey, here's John Doe, embarking on the journey to becoming a consistent, profitable trader with us. Welcome in John Doe. So that's how it is over here. All right. And I want to be able to not only keep our relationship at trading, I wanted to go beyond that. You feel what I'm saying? So yeah, let's rock out next week. It's going to be a profitable week ahead. We're going to be consistent and disciplined, and we want to grow these accounts. All right. Love y'all to life. Y'all take care. Y'all take care too, IG.